Welcome, folks, to Burrell Business Consultants, Finance and Accounting for the Small Business Leader. And this will be part one, an overview. I'm David Hilton, your leader for this course. Why bother learning this? Accounting is really the language of business, and too few small business people really understand accounting and the real value of it. But the good thing is, folks, we're not going to try to make you accountants. We're going to teach you just enough to be dangerous. No, a little bit better than that. We're going to teach you enough that you could ask your accountant 3 difficult questions when you get your own P&L statements back, your financial statements, and to be able to have a good dialogue and get good information from your accountant so that you're getting the best you can do from your company. We're also going to a couple key concepts, some key documents, and some resources you want to know about. Now, a couple key concepts here are a difference between managerial and financial accounting. I'm going to be presenting to you in these sections here what we call managerial accounting. It's accounting for you, the small business manager. And it's different than your CPA or accountant is going to do. Your accountant works in what we call financial accounting, and it's primarily for producing tax returns, statements for the banks, statements for other lenders, and so forth. But it doesn't have the detail a manager needs. And so we're going to be teaching you how to look at your material in a way that a manager needs to glean the information to improve and run their business better. Another key concept is cash versus accrual accounting. If you're under $1 million in sales, total sales, you're probably going to want to be on a cash basis, which basically means that your revenue is cash in and your expenses, as you write the checks, are cash out. As you grow past $1 million in sales, we're going to get into what you call accrual-based accounting, and your accountant will help you set this up. But basically now, the cash comes to your business and when the invoices are paid, but we are actually tracking it when you actually did the work. So it's a timing issue, and it's a fairly important timing issue to know about, and it determines some of the other documents that you're going to be wanting down the line. Now, key documents that you're going to be learning about here in these next few sections. Profit and loss statement. Now, profit and loss statement covers a period of time, say for example, January 1st to December 31st, or it could be from April 1st to September 31st. Or it could be just simple a month period of time, September 1st to September 31st. But it's a period of time. The balance sheet, on the other hand, is a snapshot in time. It tells you what you have on, in this case, December 31st. Or it could be on June 30th. Whatever the date is, it's a snapshot in time. Now, cash management includes a document called the cash flow statement, and particularly if you have moved off of cash-based accounting and you've moved over to accrual-based accounting, the cash flow statement becomes an important document to manage your business by. And a cash management and a cash flow statement covers, again, a period of time, January 1st to December 31st, or just a simple month, January 1st to January 31st. And then a budget. Now, people think of budgets as diets. It's like as bad as going on a diet. And it's really not. A budget is nothing more than taking your business plan and converting it into the language of business, which is numbers, so that you can now track and follow your business over time and make management decisions to keep yourself on track. But again, the budget, very much like your profit and loss statement, covers a period of time, again, January 1st to December 31st, or a simple month, January 1st to January 31st. Now let's take a look at how all this flows together. Kind of looks like gobbledygook here, probably, but we've got our profit and loss statement here in the middle. We've got the revenue minus the expenses equals the profit. Pretty simple. See, when you begin to really look at it and realize that what you're learning is a different language, And as you learn this language, you're going to get a more robust experience in your business as a manager and be able to take better care of your business. And so we're going to be looking at it in fairly simple terms, but that's what you really need to know. All right? And watch how the pieces then begin to flow together. So the profit and loss statement interacts with you, the owner, in a way that you really care about. What your benefits are as an owner from your business, salary, benefits you take, health insurance, your 401k plan, and someday the sale of the business valuation. It also interacts with the balance sheet. The balance sheet tells us what we have and what we owe. And then we have our cash management tool, which interacts with both the balance sheet and the profit and loss. So all these pieces work together to explain the running of a business. Now, many people ask me, well, David, I don't really understand this. I don't like numbers. And the good news about accounting is the numbers are pretty darn simple. Almost always it's minus and plus and equals. And that's about what you need to know for math to get through accounting. That's the good news. So let's take a look at some other resources you're going to want. You're going to want some sort of software for bookkeeping and accounting. The standard right now in the United States is QuickBooks. And we strongly urge you to be looking at QuickBooks, whether you do QuickBooks online or QuickBooks on your desktop. Online has some advantages that if you're home or at the office, you can be looking at your books and things like that. You're also going to want an accountant, somebody who can particularly help you with your taxes and help you to format your profit and loss statement and your balance sheets and so forth like that. All right. I generally recommend interviewing at least 3 accountants, and you want to find an accountant who you have good rapport with, so you have good give and take. And you also want to find an accountant where you're not going to be the small fish in a big pond. So you want to probably be looking at an accountant where your business size or where you're looking to grow your business to in the next 5 years would put you in this top tier of clients, but not his biggest client. And certainly you don't want to be one of his smallest clients, because you will only get attention from a junior person in his office if you're a small client. So you want to look for an accountant fairly carefully, like hiring essentially any other employee. You're also probably going to want a bookkeeper. It's optional, you could do it yourself, but you've got much more valuable things you should be doing than writing checks and things like that. So we strongly recommend a bookkeeper. Your accountant may be able to recommend a bookkeeper or a bookkeeping service to you to use for your bookkeeper. And then we also recommend a payroll service. Again, this is optional, and many small business people will choose to use QuickBooks, the payroll package that they use, but then you're still liable for the taxes and keeping up with all the tax information and things like that. And for fairly short money, you can have a payroll service who will do your write the payroll checks for you and print the checks, and also be liable for mistakes made, and they produce all the documents. So we recommend that as well. So this has been just an overview of the finance and accounting for the small business leader, and in upcoming sections we'll be delving into each of the individual parts moving forward. Take care now, folks.